You're with us here on BTTV. I'm Abha Bakaya. Let's take a look at the markets and how they're faring today. Let's bring up those numbers for you on the screen. Well, clearly some profit booking setting in, 19,633 on the Nifty and Sensex at 66,160. So some amount of cool off coming in today's trade. Let's go across to Nipun Mehta. I'm going to jump right into conversation with him because Nipun, after a bit of consolidation, constant highs, for the first time, I think we're seeing a bit of a falling market. What do you think is leading to this reaction? It can't be a build-up to the Fed. At most, is it some profit booking? Is it expiry? What are you interpreting?
Well, I think clearly it has to be a degree of profit booking. We've seen several weeks of an upswing now. We are virtually at an all-time high, closer to the levels, Nifty levels of 20,000. Yeah. So I think at some point in time after the results season, I mean, we are really at the initial stage of the results season right now. But as more and more results come in and the news flow really that has been coming around both from the domestic as well as the global markets. Gradually, I think we will reach a stage where there will be consolidation, there will be some amount of profit booking. But I think it will be great for the markets if there is that degree of consolidation that happens for a quarter or so, for at least for some time frame. Once the results get digested, what's the kind of growth visibility that's there for subsequent quarters, and selectively then you could see individual stocks or sectors moving based on that kind of revenue or profit or margin visibility really going ahead.
Okay, taking a look at some of these pharma names today. Cipla is zooming, Dr. Reddy's fantastic set of numbers coming in there. So it's not just a defensive play in today's session. Clearly numbers are also leading to a lot of cheer when it comes to some of the key pharma heavyweights. What's your outlook there, Nipun?
So one has seen pharma, I mean, if except for the last 2 or 3 months, one has seen pharma really underperforming for a fairly long period of time now, for various reasons, whether it was order slowdown from the US, so exports were falling, US FDA issues, a lot of the companies had. So really, one had seen profitability falling reasonably sharply as far as the pharma space was concerned for a reasonably long period of time. I think a lot of those issues now are behind. We are seeing higher order flow coming in from US as well. So exports really now gradually starting to show up. Domestic market, of course, as far as pharma is concerned, has been reasonably steady. But what we are seeing, at least what we've seen for this quarter, is a sharp jump in profitability. Given the sort of turnaround one is seeing as far as the overall pharma outlook is concerned. And I think gradually that will show up into turnaround in terms of profitability, turnaround potentially in terms of re-rating. So besides just looking at this space as a defensive play, I think given the underperformance or given the change in visibility of profits or higher revenues, one is likely to see a gradually improved performance coming in from this space going ahead.
All right. Also, let's talk about some of these FMCG names. We've got Nestle also scoring big time with earnings this time around. Colgate also seeing a great surge on numbers. What's happening here, Nipun? HUL we're watching out for. I mean, it wasn't entirely expected given the margin pressures on some of these companies, but clear uptick that's coming in, I guess, on the back of consumption.
So I think two clear factors seem to be playing out here, as far as the consumption space is concerned. One is obviously, to an extent, the higher rural spending that is showing up. One has not seen the kind of growth that has been anticipated as far as rural consumption is concerned, but really there are at least signs of an uptick that is there. That's slowly and gradually showing up as far as the FMCG space is concerned in terms of higher revenues. The other is probably premiumization of a lot of the products that some of these companies have been manufacturing. And that's something which is at least contributing to higher margins, higher profitability over the last quarter or so. Actually, one has seen this over the last 2 or 3 quarters, really. And that kind of product premiumization is really helping out. I think a partial factor also would be cost lowering as far as some of these companies are concerned within the FMCG space. So that's again potentially the third factor which is contributing to higher profitability, higher margins. So if there is that rural contribution that comes about in terms of spending, one could see continued growth coming about in this space going ahead in terms of both higher revenues as well as the higher volumes and gradually showing up as far as profitability is concerned.
Okay. Do you see some of this action unfolding in auto? Because while they're lagging today, numbers have been in line, and there's a lot of talk about, again, consumption coming back, things getting better for the auto industry. Would you say it's still too soon, or would you say perhaps there are just better picks in the market?
So I think the entire auto space has been in pockets really actually showing a reasonable amount of growth. There was at different points in time two-wheeler exports that was contributing significantly. Then there was two-wheeler domestic sales. There was passenger vehicle sales. For this quarter, we've even seen commercial vehicle sales actually gradually showing a decent uptick. So overall, as an auto space, there has been a reasonably consistent growth that has come about, and that's also getting gradually reflected as far as the auto ancillary space is concerned. The export space had been, to a degree, showing a degree of slowdown, but that's something which over the next couple of quarters could gradually see a turnaround, and one could see auto exports also picking up the way it had been maybe a few quarters back. So while on the one side, the auto space in terms of performance, profitability, revenue growth looks to be showing a reasonable amount of sustainability. In terms of stock price, probably a lot of that to a degree seems to be factored in. So one might not see a significant uptick depending on, of course, which company that we're talking about. We might not see a huge sort of re-rating happening, but clearly I think when one looks at fundamentals, when one looks at revenue visibility, the auto space seems to be clearly there.
Okay, that's auto for you. The other stock that's been much in news has been L&T. Are you excited by the kind of potential, if we're seeing a booming economy, whether it's majors like L&T on order wins, whether it's even in other industrials or real estate companies on the back of that NBFCs? Do you think this entire theme is going to play out as quickly and as aggressively as is being anticipated by various facets of the market?
So I think without it being a recommendation in any way, I think companies like L&T really obviously have been sort of underperforming vis-a-vis the entire market movement is concerned. And when one looks at the sheer diversification of the business that is there, or within that entire space really, when one looks at the kind of balance sheet cleaning on the one side, the ability to raise funds on the other, the ability to have the order book position that is there for a lot of these companies, the kind of execution that is happening slowly. I think clearly showing up now in terms of gradual re-rating happening. Wherever there isn't re-rating happening, one is seeing proactive management decisions in terms of buybacks and what you have really. So I think the overall capex space, your infra space, does look to be gradually undergoing that turnaround in terms of stronger balance sheets, gradually showing up into better execution and better profitability growth.
All right. What about financials, Nipun? Access, of course, high operating costs, but ICICI was shining. PSU banks are back in the limelight. Where are you focusing your attention?
So I think when one looks at quarterly profits for the last, in fact, 2 or 3 quarters for this entire space, whether it is private sector banks, public sector banks, and we've been fairly even on conversations with you and on this channel, been fairly positive about PSU banks really since the last 3 or 4 quarters, really showing up in terms of profitability, sharp rise in profitability, in fact, or sharp improvement as far as asset quality is concerned. Probably interest margins not expanding to the extent expected. So there is that degree of sort of limited uptick as far as interest margins are concerned, NIMs are concerned. But overall, in terms of both the credit growth that one is seeing, the visibility of retail borrowing that is happening really, and the benefits that within each of these spaces, whether it is private sector, public sector banks, or NBFCs, that they're deriving out of this kind of retail borrowing that's happening, is something that's showing up in terms of balance sheet size growing fairly fast, as well as the fact that asset quality remaining reasonably consistent and steady. So I think this space, while it has run up in terms of the stock price movements reasonably well or reasonably fast, but clearly profitability growth and revenue growth visibility for the next few quarters does seem to be very obviously there.
Okay, fantastic. Earnings-wise, Nipun, anything else that you're specifically watching out for, or that have been excited about so far this season?
Well, I think if you look at it on the converse, the results of the IT space haven't been very encouraging. There was hope when one or two of the larger companies came out with improved results that could be the trend across the entire industry, but we're not really seeing that. There are pockets where, depending on which segment they are operating or they're servicing, clearly there seems to be a slowdown in order flow, which had been indicated, but which, let's say, as an example, a company like TCS was not showing that kind of a slowdown, while a company like Infi did show that kind of a slowdown. So really, I think one would need to be fairly selective as far as the IT space is concerned when one is looking at the next 2 or 3 quarters. What's the extent of turnaround that could potentially happen in terms of decision making, in terms of client additions? And I think that is the reason one will need to be selective, whether in large cap or mid cap IT, in terms of exposure for the next 2 or 3 quarters, really.
All right, great. Nipun, we'll leave it there. Thanks so much for joining us and really covering all segments of the market with us today. Great chatting with you as always. Markets in free fall. Do expect to sort of see the outcome of the Fed meet as well, and of course it's expiry today, which is why we're seeing some amount of weakness in the market. And in terms of the Fed, no real reaction. I think that was essentially anticipated, so largely priced in. Clearly, profit booking is really what is driving the markets a little lower today. That's all from us at this hour. Thanks for watching.